Now to take a look at the Kenyan markets, and just looking at the trading day that was in yesterday's session, we had the stock market NSE 20 share index falling. As you can see, they're close enough to 0.6% by the close of yesterday's session. We had it just above 4,680 points. Traders noting that trade activity was slow on the day, with notable absence of both foreign and local institutional investors, while retailers were very active on the sales side. We had Equity Bank, the country's largest by customers, falling back just over 3% to 31 shillings 50 by the close, while Kenya Commercial Bank, the largest bank by assets, lost 3.2% to end at 37 shillings 50. Just taking a look at the currency side of things, the shilling certainly seeing some extension of its fall in yesterday's session, and that as importers bought dollars to meet end of month dollar payments for supplies, while shares dropped for the second straight session. As we've said, we've got that unit sitting pretty flat at this stage at 86.10 to the greenback. Moses Waireri, who's head of research at Sterling Capital, joins us now for some analysis of the market activity we're seeing. Moses, thanks so much for joining us. As I said, they're very slow in terms of trading activity from both institutional investors on the local and foreign side of things, but retail investors active on the sell side. So take us through what you're making of trading activity right now.
Okay, thank you, Alicia. With regards to the trading activities of the market over the past few weeks, it's been very slow. I'm sure what Mr. Ben Bernanke, the tapering phenomena happening in America, has actually affected the whole global financial market, and that has affected the flow of funds from foreign investors into the NSE as well. With regards to the institutional investors and retail investors, there it has been slow. We did expect that a market correction will occur during this period with a flow of about 4,600. So we still have some slight downside potential going forward, and but we'll see this reverse when the insurance companies in the financial sector start releasing the half-year results, which should be in August.
For now, though, we've got the banking sector in the spotlight. As I highlighted yesterday, Equity Bank and Kenya Commercial Bank coming under pressure today. And in that context, we've got a new banking player set to list, I&M, making its debut on the NSE. Your expectations on that front?
I&M is a very interesting bank. We did expect it to list a couple of years ago, but it listed by acquiring shares in one of the companies in City Trust. So I&M is a very interesting bank. It has excellent growth potential going forward. It has been growing at an average of about between 25 and 30% year on year in terms of profitability. I&M has a regional presence in East Africa, and the potential going forward for this bank is immense. It's immense. It's already positioning itself to take advantage of the opportunities that are present in the region currently. So I expect I&M to do very well. I expect it to list at a price of about 110 shillings.
Yeah, we're looking at market commentary being between 110 and 111 shillings at this stage, looking to be fair value. In terms of growth potential, I mean, this is a very competitive market within the Kenyan economic landscape. Looking at the banking sector specifically, how do you see it faring against its contenders, the likes of an Equity Bank and a KCB?
With regards to the competition, yes, it's very competitive, but with I&M, it's very heavy on the commercial lending side. So on the corporate lending side. So now they are targeting retail investors. They're turning into the mass market. They're trying to take on the equity banks as well as KCB as well. So they're looking at using the agency banking avenue. They're looking at using technology, the mobile platform, to grasp the retail market. Yeah, and I&M, yes, it's compared to the two, it's quite small, but with the backing and the strategy that they have, this bank has immense potential to even outgrow, to become one of the fastest growing banks in the region.
As it looks to extend its exposure in the retail market, we've got a player like National Bank looking to extend its exposure in the corporate space. Making headlines is the fact that National Bank has scrapped 2 positions of a deputy CEO and tapped the head of corporate banking from CFC Stanbic, and that as it races to cut its reliance on consumer lending lending specifically. So talk us through the kind of activity that's happening in that space.
With the National Bank, it was basically a majority owned by their government, so it had a lot of debt by the government. So National Bank, when they hired Munir Ahmed, his first task was to restructure the bank. And what he did, he restructured the bank, basically created new divisions, new departments, new heads, and immersed himself in the space of Sharia banking, which is, I'd say, the future for the commercial banks in Kenya. He already has set up that division. He's already tapping talent from his competitors to position National Bank of Kenya to take advantage of the growth that is very tangible in this banking sector. So Munir Ahmed is doing a really good job, and the way things are going, National Bank will take off in the future.
So let's get your perspective in terms of a favorite in the sector. Where would you be buying?
Sorry?
What would you be buying into? What stands out as a favorite, a stock pick for you within the banking sector right now?
National Bank.
National Bank, as clear-cut as that. Let's put the focus on East African Brewery. We've seen sales dropping there, and that after a new tax measure. We saw a tax increase come through in this year's budget, and it seems to have had quite a big influence and exerted quite a bit of pressure on its sales.
Yes, EABL, unfortunately, it's one. When the budget was read out, majority of the revenues of the government comes from either cigarettes and alcoholic beverages, because they are very inelastic. Unfortunately, EABL suffers from that aspect. So, with regards to the new tax, I'm sure it will affect the bottom line. If you also look at the financial costs that they have to incur going forward, that will have an effect on their bottom line going forward. But the portfolio that they have, the spirits portfolio, is really doing really well. If you look at what the government decided to tax the Senator Keg, which is basically consumed by the informal sector, and it's just the government looking for money to finance the huge Jubilee manifesto projects that they have in place, the development projects that they have in place. So they had no option but to tax the Senator Keg, which is consumed by the informal sector. So this will have a negative effect on EABL.